Welcome to the deep dive. It's August 7th, 2025, and, well, summer's definitely still here. You know that feeling, late summer, predictable changes happening all around. What if I told you the stock market kind of works the same way? It has its own seasons.
Exactly. And that's our focus today, seasonal weakness and market rotation. We're taking some great source material from Lucas Downey over at moneyflows.com and really unpacking what's going on under the market surface. We'll be looking hard at money flows, those seasonal patterns you mentioned. Think of this as, your fast track to getting informed on this particular market thing.
Okay, let's unpack this then. The sources say late summer often brings more volatility and shifts in how the market behaves. And we're seeing that right now, August 2025. It feels like a change, doesn't it?
It definitely does. And for market pros, it's familiar. Think about it like actual seasons. Winter means warmer clothes, right? Spring lifts the mood. And late summer, hurricane season ramps up, rising ocean temps. Well, market professionals see similar repeated patterns in stocks. They know this time of year can get choppy.
Right. And we saw that choppiness really hit just recently. The sources point to August 1st. All the major indices dropped hard. The S&P 500 fell, 1.6%? That's the biggest single drop since March, apparently.
Yeah, quite a hit. But looking at our sources, it shouldn't have been a total shock. We've seen these August swoons before. Remember 2015, China growth fears, stocks plunge, or even last year the source mentioned a carry trade unwind. Basically, lots of selling. That actually led to pure capitulation, which ironically was a sign to buy heavily. And historically, going back to 1990, this weakness often starts late July, runs through September. August, on average, down 0.6%, September down 0.8%. Then Q4 usually brings that seasonal strength people talk about.
Okay, so it's a known pattern, but here's where it gets really interesting. How could we, see this coming before it happens? What did the sources say foreshadowed this?
Right. The sources point to a sort of North Star, the Big Money Index, or BMI. It's built by tracking money going in and out of thousands of stocks daily, small, mid, large caps, everything. And this BMI, well, it signaled bids were fading before that big August 1st drop, foreshadowing the weakness. Actually, the BMI is now at levels we last saw back in May, so definitely a change under the hood. Now, when the BMI heads south, it usually means one of two things. Either you've got selling pretty much everywhere, or you have what the source calls a fat rotation.
Huh.
And the analysis suggests this current pullback. It's looking more like that rotation.
A rotation. Okay, so what does that actually mean? If money's rotating, where's it going? And where's it coming from?
Good question. We've seen this clear rotational tug-of-war just recently from July 30th to yesterday, August 6th. So on the losing side, semiconductors, the main index there, PHLX, down 4.1%. Ouch. Mid-caps also took a hit, down about 1.7%. Value stocks struggled too. Within the S&P 500, energy fell 3.57%. Healthcare down 2.73%. But on the other side of the rope, some areas perked up. Growth stocks actually gained a bit. The Russell 1000 growth up 0.58%. Staples did well, climbed 1.93%. And communication services stocks rallied strongly, up 2.82%. So you see that push and pull. And the data showed really healthy outflows overall the most in months. That's contributing to the drag on the BMI, but it confirms money is actively moving, shifting sectors, not just disappearing.
Wow, yeah, that's a stark difference. Some areas down hard, others actually up. And it's fascinating that even yesterday you could see that split, that bifurcation, as you called it. It wasn't just everything going down together.
Exactly, and that highlights something important about these money movements. The source talks about discrete equity flows. Institutions, the big players, they don't just jump in and out in a day. They build positions or get out of them over weeks, even months. And we're seeing that pattern play out in 2025. Like yesterday, August 6th, there were inflows and outflows, pretty balanced actually, 91 each. But the quality of those flows, measured by the stock scores or MA scores, varied hugely. Clear rotation.
Okay, let's get specific. Can we look at some actual stocks the source mentioned? Where's this selling pressure showing up?
Sure. There are definitely examples of stocks seeing consistent outflows. AMN, healthcare, ticker AMN. The source notes, not a single inflow all year long. Dow Inc., DOW, similar story, consistent outflows. Structure Therapeutics, GPCR, heavily sold, only one inflow day this whole year. And Kemper Corp, KMPR. Yesterday's outflows weren't new. It's been weak since April. It shows that concept, weakness often leads to more weakness. Once the big money starts leaving, it tends to continue.
Makes sense. But you said there's always an outlier, right? Was there a stock bucking this trend?
Ah, yes. The outlier mentioned is Palantir, PLTR. Described as having massive demand for a year plus. Just incredible strength. It's been one of the top scoring stocks consistently, has a rock-solid MAP score of 87.9. That's built on strong fundamentals like earnings and sales growth. And get this, Palantir hasn't seen one single outflow day all year. Zero.
Not one. Wow.
Not one. And the performance reflects that. It was flagged as a strong buy about a year ago, around $30. Now it's trading at $180. It kept showing up on the source's Outlier 20 report, which tracks the best stocks getting the highest quality money flows.
That's quite the contrast to those other names. So this brings up a really practical point. How can someone listening actually use this understanding? The seasonal weakness, these money flow patterns, how does it help? Right, so knowing about these seasons, these flows, it's like having a better map of the market, isn't it? Not just the main roads, but maybe the undercurrents too.
That's a great way to put it. It is like having a better map. And the advantage comes from using that map, using this knowledge. You can potentially spot and, as the floor says, hop on board some of the biggest trends hiding in plain sight. Recognizing these rotations and seasonal tendencies, well, it can give you an edge.
So here's a final thought to leave you with. We talked about seasonality, about money moving persistently beneath the surface. What if the real story of the market's strength or weakness isn't in the day-to-day headlines everyone sees? What if it's really about tracking these powerful, sometimes hidden currents of money, where the big players are truly placing their bets? Something to think about.